Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CGN New Energy Holdings Co. Limited annual report. CGN New Energy Holdings Co. Limited offers a diverse range of businesses and services related to the energy sector. The company generates and supplies electricity and steam in China and South Korea, utilizing various sources such as wind, solar, gas-fired, coal-fired, oil-fired, hydro, cogen, biomass, energy storage, and fuel cell projects. The company operates power stations and associated facilities, providing management services to these plants. This indicates that CGN New Energy Holdings Co., Limited, is involved in the construction, operation, and maintenance of various types of power generation facilities. The company's expertise extends beyond project development to include operational management, ensuring efficient and reliable energy production. In addition to its core business activities, CGN New Energy Holdings Co., Limited, also engages in the provision of management services to power plants. This suggests that the company offers specialized support to other energy companies, helping them optimize their operations and maximize output. Overall, CGN New Energy Holdings Co., Limited, comprehensive range of businesses and services positions it as a significant player in the global energy sector. The company's diverse portfolio includes wind, solar, gas-fired, coal-fired, oil-fired, hydro, cogen, biomass, energy storage, and fuel cell projects. This indicates that CGN New Energy Holdings Co., Limited, is committed to exploring and harnessing various forms of renewable and non-renewable energy sources. CGN New Energy Holdings Co., Limited, services include generation and supply of electricity and steam, operation of power stations and associated facilities, construction of new power generation facilities, management services for power plants. The company's focus on diversifying its energy mix and expanding its service offerings has enabled it to establish a strong presence in the global energy market. CGN New Energy Holdings Co., Limited, market capitalization of $12 billion, is materially smaller than most of its industry peers of roughly $75 billion. CGN New Energy Holdings Co., Limited, trades at a lower price-to-earnings ratio of 6 times and a lower price-to-book ratio of 0.84 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The company maintains a moderate leverage profile, with liabilities making up 80% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.81%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, tariff income from sales of renewable energy has increased significantly, with a notable rise in 2025 compared to the previous year. Additionally, the reversal of expected credit losses on trade receivables has also contributed to revenue growth. Furthermore, an increase in power generation due to expanded installed capacity for solar projects and economies of scale have also driven revenue upwards. On the other hand, several factors have led to a decline in revenue. A decrease in tariff rates for wind projects in China and the disposal of certain conventional energy projects have had a negative impact on revenue. Moreover, a decrease in weighted average tariff and power generation in Korea has also contributed to the decline. The company's reliance on conventional energy sources, such as coal-fired and oil-fired projects, has also led to a significant decline in revenue due to decreased capacity. Overall, these factors highlight the importance of diversifying revenue streams and adapting to changing market conditions to ensure sustained growth. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the provided information, the company has achieved a substantial increase in operating cash flow by 2025, reaching a notable figure of $1,234,119. This positive trend suggests that the company is efficiently managing its resources and generating sufficient cash to cover its operational expenses, indicating a strong foundation for future growth and stability. The company's debt level has undergone significant changes over the past period. Initially, there was no change in non-current and current liabilities. However, subsequent reports reveal a substantial increase in bank borrowings, with a 149% rise, and loans from fellow subsidiaries increased by $155,646,000, 12%. The consolidated liabilities also saw an increase of 1.3%, while bank borrowings rose by 15.8%. Furthermore, the current liabilities experienced a notable jump of 31%, whereas non-current liabilities decreased by 13%. In terms of interest expenses, there was a decrease in finance costs by $22.3 million, 12.3%. This reduction in interest expenses is a positive development for the company, indicating that it may be able to manage its debt more efficiently. Overall, the changes in debt level and interest expenses suggest that the company has been actively managing its financial obligations, with some areas showing significant increases, while others have decreased or remained stable. The performance of power plants across different regions has been a mixed bag. In the People's Republic of China, power plants have shown resilience despite a decline in revenue by 7.8%. However, this decrease was offset by an increase in results by 10.3%, indicating that these power plants were able to adapt and improve their overall performance. On the other hand, power plants in Korea have struggled significantly. A substantial drop in revenue of 20% has been accompanied by a decline in results of 6.9%. This suggests that Korean power plants are facing significant challenges that need to be addressed urgently to prevent further deterioration in their performance. Management's strategy for the company focuses on transforming its approach to new energy development. The goal is to shift from a supply-driven model to one that is demand-guided, with an emphasis on green transformation. This involves accelerating exploration of new models and adapting to market-oriented reform trends. In terms of specific sectors, the company will focus on engineering, construction, and project execution in core new energy areas. It aims to achieve continuous improvement in construction quality and operational efficiency while exploring diversified development models. The company also seeks to reduce its reliance on power grid accommodation and adapt to changing market conditions. Looking ahead, 2026 is identified as a pivotal year for the company's high-quality transformation and upgrading in the new energy sector. Management emphasizes the importance of pursuing progress while ensuring stability and enhancing quality and efficiency. The ultimate goal is to accelerate advancement towards excellence-driven development. There is no notable activity in terms of acquisitions or divestitures. The company has chosen not to engage in any significant transactions involving the purchase or sale of assets, businesses, or subsidiaries during this period. This decision suggests a focus on maintaining existing operations and resources rather than expanding or restructuring through external means. The company has a history of paying dividends to its shareholders, with the most recent payment being 1.61 US cents per share, resulting in a total payout of approximately $69 million. This indicates that the company is committed to returning value to its investors through dividend payments. However, there is no information available regarding any share buyback activities by the company. That concludes the financial summary for CGN New Energy Holdings Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.